All right. Hello, everyone, and thank you all for joining us during the Lytham Partners Winter 2021 Investor Conference and what we're aptly calling our 2022 Vision Event. My name is Robert Blum, Managing Partner of Lytham Partners. And during this fireside chat, we welcome S&W Seed Company, ticker symbol of SANW on the NASDAQ, and their Chief Executive Officer, Mr. Mark Wong. We'll dive into questions in a moment, but I want to remind everyone that Mark is available for one-on-one meetings later this week. If you've not already signed up, please send me an email to Blum, B-L-U-M, at lythampartners.com, or you can visit the website, lythampartners.com/virtual. Click on the one-on-one meeting request button, and we will get you taken care of. So with that said, let's begin. Mark, good morning here, and let's start with maybe a brief overview of the company and your background.
Sure, that'd be great, Robert. And thanks for inviting S&W and myself to the conference and the fireside chat. So my background is long and strong, as they say, in the industry. I'll let our attendees kind of do the math, but I entered the seed biotech business in 1978, before it was a biotech business. And I've had many years, fortunately, working with farmers in agriculture. I have worked in every single crop I think that farmers raise all around the world. I have built 3 big seed biotech companies, sold 2 of those to Monsanto and 1 to Dow Chemical, and had a long history with Monsanto. Sat on their ag board for a number of years and sort of helped the industry figure out how we bring traits to market, what it means for the ag industry and farmers. And it's been a pleasure, and I continue to do that. I joined S&W about 5 years ago, roughly, and sort of have spent time kind of rebuilding the company based on all of that experience into a more formidable competitor, and a company that I think will be both profitable, fast-growing, and offer investors a real opportunity to participate in agriculture in the next decade. So it's a pleasure to be with you today.
Sounds good. So let's over the past few years, you just mentioned it, you've sort of focused on transforming this business into, I think, what you define as a trait technology company.
Yes.
For those not sort of familiar with that concept, let's sort of start in very layman's terms, what that means and why you're doing it.
Yeah. So we in the seed industry and S&W also focus on creating high-performing products for farmers. And we use a couple of techniques. We use plant breeding, and we use molecular tools to sort of look at the DNA inside plants to figure out which plants make the best parents to create high-performing children that the farmer can then buy from us and plant in his field. So as a parallel, think about it as horse racing. Breeders breed male and female horses to create that high-performing thoroughbred that's going to win the Kentucky Derby or the Preakness. They want a horse that's fast, and they want a horse that has durability, and that's basically the same kind of idea that we do. So in our fields where we're breeding all of our different crops, we basically act like that racehorse breeder. We are looking at all of the different potential parents for, say, sorghum or alfalfa, our 2 main crops, or stevia, and we're then trying to create the best children of those crosses that give the farmer performance in his field. And that's what we've been successful doing in our sorghum and alfalfa, our 2 biggest sales species by % of sales at S&W, and that's what I've done my whole career through different seed companies and different crops.
So your lead crop in this sort of trait technology, or your lead product is Double Team, and it's definitely a key driver that you've discussed going forward here. what was that development process like? And, let's walk through the benchmarks over the next couple of years and what investors should be looking for.
Sure. So just as in my previous example, it takes a long time to sort of understand how to breed a racehorse and what's a successful racehorse. It takes a long process to breed these high-performing seeds for the farmers, and it's probably about an 8-year process. And so our double team trait, which we've had now for about almost 5 years, it was our predecessor company that we purchased that started the original work. And we continued with that, and now find ourselves with a very hot product in the market that was sold out last year, will be sold out this year. And so we're looking for 2023 now to continue to gain market share with our trait in sorghum. So what exactly is the trait, and sort of how does a seed company do this sort of magical thing? Well, yes, it's some magic. It's mostly hard work. The first thing to do is identify an opportunity, right? So we figured out, and the industry knows this, that sorghum acres have dropped significantly over the last 20 years, probably something like 15 million acres to 6 or 7 million that we plant today. And we're mainly here talking about grain sorghum. There are different kinds of sorghums, but grain sorghum is the one we're focused on. It's the most valuable sorghum crop. And so why has this occurred? The problem has been that sorghum is a grass, and that there's no herbicide to use to control grass weeds. So when you spray a grass herbicide over the top of a sorghum field, it kills all the grasses, but it kills the sorghum also. And that's obviously not something we or the farmers want to have happen. And so there's been no ability to control grasses, and so the acres have gone to corn. So in corn, there is a gene that allows you to spray over the top of corn to control grasses. And again, corn, like sorghum, is also a grass. And so though corn acres have basically taken over, those sorghum acres that I mentioned have gone down over the last 20 years. So with our trait, we're obviously hoping for market share to win a big piece of that 6 to 8 existing million acres that are planted this spring. It's a spring planted crop in the US. But we're also thinking that some of those lost acres are going to come back to sorghum. And so that's the even more exciting part, is the ability to win back those corn acres into sorghum. And that's a big reason why we've been sold out, is because sorghum farmers want to plant sorghum, and now they have a tool to do it. Why do they prefer sorghum over corn? It requires less water. And as everybody is reading in the popular press, water is a real issue, a real problem in the Western Corn Belt. We're in the 3rd year of the mega drought, they're calling it. And, there's horrible pictures of reservoirs with no water in them. And there's very little snowpack this year. I live in Colorado, and there's very little snow in the mountains. It's been very warm. The snow has fallen, what moisture there is has fallen in the form of rain, which is, flowed down into the rivers and is being used today. But usually it's stored in the mountains as snow, and then melts in the spring. So we're not looking to a very good spring, frankly, in agriculture based on the current snowfall. And farmers are looking around for crops that can produce a profitable crop with less water, and in sorghum's case, also less inputs in terms of what fertilizer and other things that a farmer needs to provide to the plants as they're growing, so that he can get a good yield of sorghum in his field, using our trait to allow him to spray over the top and control weeds, grass weeds. And we're very excited about that. Like I said, we're going to be sold out again, and farmers really love the product because it really works really well. And we're super excited about that for ourselves and super excited about our farmers. It's nice to sell somebody something where they want to buy it already for the next year because it's done so well for them. It's really very, very rewarding for all of our R&D people who have spent now about 6 years developing this product. And in the next 2 years, that's sort of my 8-year process. We'll be into some significant market share in the U.S.
So in addition to the herbicide trait here, Double Team for sorghum, you have some additional trait development products in the pipeline. How should we think about new product introductions over the next couple of years?
So there's two things that you need to effectively develop these new traits, and one is the R&D expertise that I've sort of alluded to with Double Team, which obviously the success of Double Team has shown that we have good scientists in our plant breeding and research operations. But the other thing that you need is you need to have close contact with the farmers. And so one of the things that I've done, that S&W has done since I've come, is really put boots on the ground at the farmer level so that we can do demonstration trials. We can talk to farmers about why we think a product is interesting for them, why it will make them more money. That's what they're really interested in. We have 25 sales reps on the ground now. Half of those are in Australia, half of those are in the US. And we really do have the ability to convey information to the market about our products, but also to read the market in terms of unmet needs and what ag is sort of what farmers are telling us that improved products would look like. What characteristics would those improved products have? So with now these two new functional capabilities of S&W, we have generated in this, again, long process of sort of 8-year development times, a couple of other new products. So when you get close to the end of that 8 years and you have exciting new products to sell, that's always very rewarding for a company to finally be at the place where farmers are nodding and saying, yes, I'll try some of that, I'll buy some of that. And you're watching some good results. So our second product is in alfalfa. It's not a sorghum trait. It is IQA, we call it. It's a quality trait that allows the dairy industry to basically produce more milk with every sort of ton of feed that they feed that are fed to their dairy herds. Right. And that's a real important idea in today's market. In the Wall Street Journal, I think just a couple of days ago, there was a big spread on the California dairy industry, which is the biggest California is the biggest dairy state in the U.S., and how the lack of water is forcing dairy farmers to reduce the number of cows they have and try to get the most milk they can out of the existing herds that they're trying to keep. And profitability is a big problem for them. So getting more milk out of every unit of feed is a really good trait. And so we're just starting to introduce that trait in our fiscal year 22 this coming year, and we'll see some more of that gain market share in 23 and the years after. Our third trait is a trait in sorghum. It's now not for grain sorghum, but it's for forage sorghum. It's a type of sorghum in the sorghum family that is directly fed as a grazing crop to animals, basically mostly beef cows and dairy cows in the US, but like in Australia, they feed it to beef cows and sheep. And it also has a big potential market in places like Africa, where they have small herds that are managed by tribal villages, and those animals are used for both meat and milk. They're dual purpose, and they feed them sorghum as a feed crop. So that trade makes that feeding process more efficient. Durin is a compound that sorghum can produce that makes the cows, it can make them very sick in large amounts. And so it's better to just get it out of the genome, get it out of the crop, get it out of the genes. And so that's what we've done and all of our crops are non-GMO. So we found through Purdue a mutant line that did not have Durum in it. And we've, with the help of Purdue, multiplied that and bred that down so that it's now a pure line with a Durin-free parent. And we're in the process of increasing seed and testing it and see how it works in different geographic regions. And that's all part of the 8-year process that you go through with product development in the proprietary seed and trait business that we're in. So it's exciting times for the company. We've built these functional capabilities in marketing and in R&D, and we're starting to see some products come through our knowledge now of the market and our ability scientifically to create products that solve those market problems.
Now, you talked about some of the new products coming to the market. Historically, again, alfalfa, sorghum sales, sort of broadly defined as middle market crops, right? With the focus there as opposed to, let's say, corn and soybeans, right? Why are you focused in those areas? And then maybe as a follow-up to that, there are 4 large seed companies, right, in the world. They're give or take, and I think they own or they control somewhere around 70% of all seed sold globally. I assume you compete with some of them in certain crops. How do you look to differentiate yourself in the market within these segments?
Yeah, great question. So, some of my previous companies were in cotton, soybeans, and corn, which are the big 3 crops that those big 4 companies focus on. The industry's gone through a huge amount of consolidation. The big 4 of today were the big 6 4 years ago. So, that's just part of kind of the financial muscle power that you need to create products in these big 3 crops of corn, soybean, and cotton. So my last company was a cotton company, and it recently sold in the marketplace, I think 3-4 years ago, for over $1 billion. And we're a small market cap company. We don't have that kind of capital to invest in creating those kind of opportunities. So we focused on the crops that really get less attention, less breeding dollars, less marketing dollars. They're still important crops in terms of acres around the world. Sorghum's probably 60 to 80 million acre crop around the world. Corn is a 100 million acre crop in the US only, and obviously much larger on a worldwide basis, probably 2.5 times that. So we focused down on purpose on some of the middle market crops, like we call them, which are still large acre crops, but have not been the place where the big 4 have been focused on R&D and marketing basis. And we think that gives us an opportunity to create value in these crops, and it gives us the opportunity to imitate the type of breeding and market information effort that the big 4 do, but focus on the crops that we're able to compete in. We think that that's obviously a successful strategy given our double team success and our sort of sold out situation in the last 2 years, this year and last year. And yes, to your second part of your question, we do compete with the big 4 in some of the crops. One of the big 4 competes in alfalfa against us. 2 of the big 4 compete in sorghum against us. So we're in the field with them, and we compete against them for share. And it's a healthy competition, and it forces everybody to be efficient and create higher performing products for the farmer that, in the end, as I said, the farmer's goal is to make money, and seed companies with traits, that's what they try to do. They try to give offerings in terms of new products to farmers that allow them to make more money. And especially in trying times like these where water is a problem in terms of availability and costs are rising for the farmer. He's lucky that commodity prices are also rising so that he can still make a margin, but there are price issues.
You recently, let's transition for a moment. You recently signed or entered into an agreement with Ingredion for stevia leaf supply. Now, this is a different model than the traditional seed sales, such as what you're doing in alfalfa and sorghum. Talk a little bit about that agreement and what it means for potential future agreements for S&W as well.
Yeah, thanks, Robert. So yes, we announced now a few months back an agreement with Ingredion to look at the production of stevia in the US. Right now, stevia, for those who may be a little bit familiar or not familiar at all, it's a crop that is a sweetener. And so the leaf has non-sugar molecules in it that basically trick your tongue into believing that you're eating something sweet. So people with diabetes can eat stevia and they get that sweet taste that you would if they were eating beet sugar or cane sugar. So it's a fast-growing crop. It's worldwide market shares size is probably 1.5 billion, of which half of that, 800 million or so, is in the US. Right now, all of the stevia leaf is produced in China, and because they produce it with hand picking, so they pick it like tea. So they have people in the fields who are literally picking the leaves from the stevia plants, and it's farmed as an annual crop. So every year they replant it. And it's relatively cheap on a per ton basis. So we've been breeding stevia at S&W for about 10 years, and that's a long time. Like I said, it's sort of an 8-year product development cycle, and we've been concentrating on getting high quality stevia leaf at a price that we believe is competitive with China on a per ton basis. And so we have now, why it took so long to sort of get there is we've developed a production system, which is a 3-year production system. So we only plant the starting crop once every 3 years, and then we harvest it with a mechanical harvester, which pulls the leaves off but doesn't pull the plants out of the ground. And we can keep the crop productive for 3 years doing that, and we can produce a high quality stevia leaf that on a per pound basis is competitive in cost to what's produced in China. And so our program with Ingredion is to test that and then to build a production plant in the US to basically extract the stevia from the leaf, which is a simple process. You just basically boil it, you make tea. And then the more complicated part is to purify that tea into the different stevia products that you sell to the food industry. And that's what Ingredion does well. And that's why we're partners with them. And that's why we think it's such an interesting deal. So to improve sort of our economics and also the addressable market that we're looking at, we decided in this case, because the stevia is right now a very narrow market. So there's no other company, not the big four, not smaller companies. There's no other company that has our germplasm and production system for the US. And so if you like our system, like Ingredion does, then you have to be our partner. There is no place else to go. So rather than sell the seed this time, we decided that we would try something a bit more aggressive, and we would buy the leaf from our farmers. So when we contract to put the acres in and sell them the seed, we also are buying the leaf, whatever they produce, at a predetermined price, and then we're selling to Ingredion at a predetermined price for us, so that the farmer makes money, we make money, and because of the low cost of our leaf, Ingredion can make money. And that's the program that we're on. We think it's going to be very profitable and an important market for S&W in the next 10 years. Somewhere in the neighborhood of 100 to 200 million in sales for the leaf is a conservative estimate, in my opinion, for what we would do in the U.S. market. And right now, we're concentrated on the U.S. market because of the economics and our ability to produce stevia in the largest market for the on a demand basis for the products. And if we've learned anything from all of the supply chain problems that COVID has created, it's that you want to produce the crop as near to where it's going to be consumed as is possible, because not only does it reduce costs, and everybody knows the container costs have gone 5x, some places 8x over what they were last year, but more importantly, it's just easier, right? You don't have to put the crop in a container and put it on the water like you would if you were getting leaf from China. You just produce it. We produce it in the southeastern U.S., so that would be North Carolina, South Carolina, Georgia, maybe Florida. We're testing Florida now. It might be a little too far south, but in those other southeastern states, those are our key production states. And interestingly enough, they have some experience with leaf products. That was a big tobacco production area 20 years ago. And so the farmers or the sons of farmers in this case, are pretty excited that they were going to get another leaf product to produce. Yes, it's not tobacco, it's stevia, but they do have some history with producing leaf products in the Southeast. So it's a great thing for farmers. It's a great thing for us. It's going to be a great thing for Ingredion to be able to have a source of U.S. supply for leaf. And we're just very excited about this new model that allows us to produce things in plants and then and move upstream with our partner and not just sell seed, but sell some of the proprietary input that is made into another product for a consumer.
Right. Let's sort of go back to almost where we started here. You issued a trait deck, a tech deck, about a year or so ago. And I think some of the things that really stood out in there was margin expansion with some of these new traits. And you've talked about some of these. Help us understand what this business can look like, over the next number of years.
Yeah. So that in that document that you're referring to, which was, I received comments from our investors that was a little bit unusual for a small cap company to produce a projection of a 3, 5, and 10-year vision for the company. But we felt like we needed to describe our the potential sales effect of these traits that we're putting into plants, into two traits into sorghum, like I mentioned, double team in our second trait during free, and then a trait for IQA, a trait for alfalfa for quality of milk production. So that vision for 3 years, that would be our fiscal year 2024, was for us to be about 130 million in sales. And we think that that's still a good number, because farmers have likened the performance of our double team trait in sorghum, and we have very aggressive plans for next year based on that demand. So that would be our 2023 fiscal year. we're really very optimistic that that 3-year vision is still a good projection of where the company can be, and the profits that are going to come from that are still good estimates of where our EBITDA could be in the 2024 year. So while we don't give guidance to earnings, and for sure we don't give guidance to earnings in 2024, this was meant to give at least a picture of directionally where we thought these traits could take S&W, so that investors would have an idea of the possible opportunity that is represented by S&W as a company, and the type of things that we were doing and their effect financially on the returns of the company.
So as we sort of begin to wrap things up here, again, this is what we're kind of calling our 2022 vision event.
Yep.
As investors sit here, what are the sort of the key milestones they should be looking at in 22? And if we were to sit down again 12 months from now and look back, what are some of the biggest risks to achieving some of those milestones?
Yeah. So the opportunities are as I have described. It's this ability now of S&W to put proprietary products with genes into the market, and to show that farmers will pay for them because they perform above what can be purchased by those same farmers from our competitors in the industry. And that's a very rewarding thing, and I think investors should start believing that we can do what we say, and that in 2024, 2023, to specifically look at your question, they'll begin to see that there's real muscle from a financial standpoint coming in the terms of sales and earnings, that you'll see margins improving, gross profit margins improving, because the traits are very profitable, because they provide such high value to farmers. And we, in terms of the risks, we face the same risks, I think, that every other company does right now. We're very concerned about supply chain issues. We're trying to deal with those in terms of shipping our products as early as we can, staying on a detailed basis on top of every container that we have on the water, or every container in Australia and the US that we have on the road, and just making sure that we have available to us inventory points that are closer to the farmers who are going to use our products, so that if things are delayed, we have inventory already situated in places where the farmer can get access to it. So it's definitely a problem. It's raising costs. We've had to raise prices selectively across our products, and I am concerned for our farmers who are trying to grow food for the world, and I am a bit concerned about world food prices right now. So those are things that I think are a potential big problem for the ag as an industry. But I think that seed companies, because of their proprietary products, will probably fare a little bit better than maybe some of the other sectors in ag.
Yeah. All right, we're at sort of the end of the time here. Anything else folks should take away from the discussion?
Yeah, just that, this sort of long process of product development is now kind of at the end point, and we're starting to see real sales. It's very exciting for all the people in the company, very exciting for sales reps to have something to go call on farmers and farmer dealers to introduce them to. We have a big media program, both online and with information supporting all of our products, and we're sort of like that guy who's run the marathon and he knows he only has 5 miles left of the total, and we can see the finish line from here, and it's pretty rewarding, frankly. Yes, we're not across the finish line yet, but now is a great time to be an S&W shareholder, because now time is important and progress is seeable. And we hope that the company's going to make some real inroads on a share basis in the markets that we have concentrated on. So thanks today for having S&W and me on this little chat, and it's always a pleasure working with you, Robert.
Same here, Mark. It was great to have you on again, and thank you for the time. We appreciate it. I'll say to anyone out there that still would like to arrange a one-on-one meeting, you can send me an email or go to the website and select the one-on-one meeting request. We hope you all enjoy the conference. Mark, again, thank you very much.
Thank you, Robert.